I'm Howie Lim. This is Money Hacks by the Business Times. No matter what's going on Wall Street and global markets, you can always find an opportunity that's doing well. Now, ETFs are low-cost investment vehicles that allow investors to track popular indexes or benefit from experienced manager selections, aiming to outperform the market. These versatile instruments can form the core of a portfolio. Unlike open-end mutual funds, ETFs are traded on exchanges throughout the day. So how have they been doing? And how has market volatility affected them? Or not? Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And if you have feedback or an idea for a podcast episode, do get in touch, btpodcasts@sph.com.sg. And helping us out today is Dina Ting, Senior Vice President, Head of Global Index Portfolio Management at Franklin Templeton. Dina, thanks for your time.
Hi, Howie. It's a pleasure to be with you.
ETFs are a really popular investment, aren't they?
It's true what you said about ETF. I think ETF is providing investor choice that they haven't been able to have before. A lot of the strategies are now packaged into ETF at a very low cost. Looking at the popularity, almost every year we are seeing a new record in terms of net flow into the vehicle. Just last year, I think we broke new record. And so far this year, which is not even half a year, we already blew more than like half, right? So there's a high chance that the flow will break another new record going forward.
Would it be fair to say then that the shift in investor appetite for ETFs is not surprising, thanks to market volatility driven by Trump's policies?
It's not. If anything, the ETF provide a precise vehicle to get specific exposure and then a strategy that could be very specific. So you can have a strategy that's more protecting in terms of volatility. You have a strategy that is double the volatility if you wanted to. You can also go into a strategy that balance between the income as well as performances. So there's so much variety now in terms of what's available in ETF format. And that's why we think that it's good for investors. At the end of the day, you have so many choices, and anybody with a brokerage account can easily pick a specific strategy that fits within their overall investment goal and be able to express that in ETF.
If they're so popular, Dina, do we need to talk about head and tailwinds? Won't people just get ETFs no matter what?
There's always headwinds and tailwinds in any opportunity. From the perspective of ETF, the headwinds is no different than a headwind of investing in a specific stock. So there's that challenges of that performances of that specific strategy that you pick. Even though ETF has been around for many, many years and it has been proven is trading as expected, the name ETF, exchange traded fund, it means that it's traded in the market just like a stock. But people always question the liquidity. Oh, in the event of a black swan, in the event of extreme market volatility, does the ETF still trade? Does it still reflect the underlying holdings? And throughout time, it has been proven that yes, it is a reflection of what the ETF underlying holdings. And even in the period of uncertainties, especially when there's a disconnect between the underlying market hours versus the ETF where it's trading, you can still see using ETF as a price discovery mechanism. So both headwinds as well as a tailwind in terms of providing that secondary liquidity. Because if you, let's say, invest in Asian stocks that traded in a specific market hours, while ETF is trading at the US market hours, you have an opportunity to kind of get a price discovery that you don't have if you just buy the individual stock in the local market.
What are the market conditions which favor ETFs? Are we in them now?
Yes, so the market that favor ETF is almost when it's like very stressed. Sometimes it favors the ETF because that is the easiest way to get liquidity. We see that quite a bit with fixed income investment because when you want to trade the underlying bond itself in a period of distress, it's quite challenging. But in ETF format, fixed income ETF, that secondary liquidity still exists. And it's actually a good avenue for many investors to access the liquidity that you don't have in the underlying.
Sounds like now's a good time to stock up on ETFs. It's looking good for the rest of the year, right?
I think what most people confuse, the ETF is just a wrapper into the different strategies, right? You can have it in any format. You can have it in mutual funds, you can have it in ETF, you can have it in separate account. But at the end of the day, it's what's the underlying strategy for that investment. But the wrapper does have a lot of advantages, right? So if you're investing in the US, ETF tends to be more like managed in terms of like tax efficiency, right? Which is only relevant, I think, for US investors that ETF doesn't distribute capital gain. At least they mitigate capital gains distribution in comparison to, let's say, other vehicle that is not as efficient in terms of managing that capital gains distribution. So investor has a lot more say in terms of what they get and when they will do it. They're not driven by activity of others, but they're more by activity of them to determine what capital gains that they will incur or not incur. So ETF allow that. And the fact that it's exchange traded, so in comparison to mutual funds, right? Mutual funds only traded at the end of the day, but ETF you can trade it throughout the day. So in terms of the vehicle, I mentioned low cost at the beginning, and it is true. A lot of the strategy are priced very competitively. Investors have their own choice, whether you want US large cap, whether you want large growth or international markets, all the options are available and everything is priced competitively. And that's the reason why you see the explosion in growth in terms of like the net flows and in terms of like the usage as well. When I started in the ETF industry, a lot of the usage people think that is only institutional at the beginning. But now it's actually a combination of institutional and retail. And the horizon of holding varies as well. Some people hold it for a long period of time as a core holding. Some people using it tactically to kind of express certain view. And some people are using it for long position. Some people are using it for short, right? So there's quite a bit of a variety. And I think that's the reason why the popularity of ETF we expect to continue.
Okay, still to come with Dina Ting from Franklin Templeton. How can we position our portfolios and what are her top conviction calls? More in a moment.
Lens on Singapore is now bigger and better. The same deep dive exploration of socioeconomic and geopolitical issues which impact our lives here in Singapore and the region is now a video podcast. If watching a conversation is your thing, join Claressa Monteiro in monthly conversations about things that matter. Subscribe to the BT Lens On playlist in the podcast tab of the Business Times YouTube channel and start watching today. BT Lens On Singapore, now available in audio and video.
And now, back to Money Hacks from the Business Times.
Welcome back. Dina, given all we've talked about with regard to ETFs, how do we position ourselves and our portfolios then?
Yeah, I think in the market that we're seeing right now, where there's a lot of uncertainties, right? Starting from Liberation Day and all the different negotiation on the tariff side, as well as a lot of businesses, that uncertainties basically mean that for investors, it's really important to increase your diversification, right? You want to have uncorrelated asset in your portfolio to be able to diversify your risk. Because right now, a lot of markets has experienced that shock in terms of volatility. Even the US, which is considered like a safe bet, is no longer totally a safe bet. And you see like even higher volatility change post Liberation Day in the US versus some of the international market. And that volatility and that uncertainty also drive the CEOs of company because they're still not sure. Despite everything, all we have is a delay. So the reality of what the impact will be is still a question mark for many people. So people are a little bit more hamstrung and making a decision. But for a typical portfolio, when there's a lot of uncertainties, the best way is to diversify And the easiest way to diversify is using ETF vehicle because there are different options out there, whether you want fixed income that has lower duration, whether you want to have equity outside of the US, whether you want to have dividend yield strategy to help ride this volatility. All those strategies are available in the ETF format, in the ETF vehicle. So that gives investor a choice to find those uncorrelated assets to kind of help navigate these turbulent times that we're experiencing.
Right. So what's looking good? I mean, what are your top conviction calls for the market?
For me, I think certain countries, because the tariff is implemented per country, even that there's a lot more refinement, it's definitely an opportunity to diversify into international market. A lot of investors tend to put almost zero into high. The average was about 22% into international. But in reality, if you just look at the available market cap, it's about like 35% should be allocated to international. So historically, people has been underweight international equity. And I think it's a chance for to kind of balance it out because in reality, this surprise in terms of tariff is an opportunity for countries to rewrite the global alliances. Now, whether that took place or not is still a question mark, but it's an opportunity. Whether you're Europe, whether you're Asia, now do you need the US to kind of cover everything, or do you have like bilateral agreement per country, right? So there is that opportunity as well. In that regard, specific countries who still benefit from close location to the US. If you look at the driver of the US, is the biggest consumer. At the same time, GDP in the US has shifted significantly from a goods focus into a service focus. So things have evolved over the years, but the aspiration to bring all the goods production into the US cannot happen overnight.
Yeah, because there are territories like Taiwan who are arguably the world leader in terms of semiconductor manufacturing.
So it's difficult to displace them. Even if you invest billions and billions of dollars across, it's not something that you can do in 3 years. Each of the countries still have competitive advantages. Countries such as Mexico and India could be an alternative for potential manufacturing. Mexico, the close proximity will make that supply chains a little bit easier. And a lot of US company already made an investment there to build it. So it's not that easy to kind of reverse course. I know everybody's thinking through it, but the reality of it is not that easy. When you build something, it's not as easily changed into somewhere else. In the service economy, that is easier. But in terms of like through goods manufacturing, that is a lot more difficult to displace. The other region that could be interesting is Europe because they're waking up, right? Oh, okay, we cannot just sit around and hoping that you guys always do everything. But now they actually consciously make a stimulus, especially like economy like Germany, to bring a lot of those either defense spending as well as many of those in-house manufacturing, creating that alliances themselves across. So it remains to be seen whether each of these countries are successful, but it is definitely a wake-up call across, not just in Asia, but also across Europe as well as Latin America.
What advice do you have for retail investors? It looks to be increasingly more volatile, if that's even possible. Trump's tariff pauses come to an end in July.
I think for investors, it's important to look at the long-term horizon and looking at the longer-term theme because even the US, who has been struggling this past year, there are days when they just punch in like amazing return in one day, right? The volatility, it's been crazy on a day-to-day basis. We haven't had like those 10% days, but we did see it quite a bit this year. So for investors is to look at each investor has a different investment goals and their risk level or risk aversion. So it's helpful to kind of balance it on that front. And going back to diversification, it is good to balance your exposure, right? It could be in terms of equity exposure, in terms of fixed income exposure, and then alternative exposure, such as gold, for example. So having different levels and then thinking about scenarios across would be helpful to kind of like navigate and stay calm in this turbulent market. It is difficult, of course. Well, okay, even at the beginning of the day, intraday to end of day, things are different. But by being disciplined in terms of what you're trying to accomplish on the long-term horizon and using the opportunity, right? Because intraday opportunity sometimes could be a good entry point for some or a good time to sell for balancing your gains against your losses.
Takeaway order Money Hacks 221 is ready. Exchange traded funds are an excellent entry point into the stock market for new investors. They're cheap and typically carry lower risk than individual stocks since a single fund holds a diversified collection of investments. A big thank you to Dina Ting, Senior Vice President, Head of Global Index Portfolio Management, Franklin Templeton.
Thank you for having me.
I'm Howie Lim, and this has been Money Hacks by the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.